Welcome to CivilNet. This is your host, Eric Hacopian, and we're very pleased to have with us today Armen Nurbekyan, who's the head of the Macroeconomic Directorate at the Central Bank of Armenia. Mr. Nurbekyan, thank you for joining us.
Thank you.
I have a first question, which I think is a fundamental question when it comes to your work. And one is about the value of the dram. We've had very interesting stability on that front. Right now, the value of the dram is almost where it has been for many years, despite the fact that we went through COVID, we went through a war, we went through a near political civil war for a year, and right now we're pretty much where we started. There was a depreciation somewhere in the 8 to 10% range, but then we're back to where we always were for many, many years. This despite the fact that we run chronic trade deficits. We export more tourist dollars than we import tourist dollars right now, or historically. Remissions from abroad are actually becoming a smaller part of the GDP as the GDP grows. We have very limited foreign direct investment. And then when you compare us to our neighbors, 3 out of our 4 neighbors have had tremendous depreciations in their currency for different reasons, because they have unique political, economic situations. So can you explain to us what explains the stability of the dram, especially compared to other currencies in our region?
Well, first, when we talk about the currency, it's very important to do backward analysis and understand what are the fundamental drivers of the currency. So this question was asked to the central bank for many times since the March of the last year, where we first were hit by COVID, and then of course the war came. And the very fundamental point is that if you look at the fundamentals, like trade balance, remittances, so far they have been performing much better than we expected. So after the COVID and the war, exports have been much stronger than we expected. Imports, on the other hand, in parallel with the drop in consumption, squeezed much more quicker, and in that sense, from trade balance, we have been performing much better. Remittances, which you also mentioned, again have performed very, very well. After the second half of 2020, we have double-digit growth there. One of the stories there is that we actually have very high growth from remittance from the US. We have several stories behind that behavior, but the most salient one so far is that after the Biden program, there was a huge injection of liquidity in the US market, and we see that also reflected in the remittances in Armenia, because as you know, we have big diaspora in the US. And we also looked at some Latin American countries in the neighborhood, and there as well, we see that the share of the remittances from the US have been on the rise during the last year. So in that sense, if you look at it from the fundamental point of view, that has been very good. Now, then the question, as you said, if that everything was so good, how come that we have this 8-10% depreciation? And the reason behind that is that there was a huge uncertainty in the market, and we actually looked at the specifics. It looks like that at that point, what happened was that the corporates were hoarding cash, so this uncertainty was driving the depreciation.
The corporate sector here?
Yes, in Armenia. And that's why when the uncertainty went down, we saw exchange rate going back.
I want to talk about the second big international issue in economics, which is inflation. There's worldwide inflation in almost every country, in some places far more dramatic than others. In the world, it is designed, it's said to be driven by, first of all, a rise in commodity prices. Secondly, supply chain issues, which are substantial, especially in the West. We have inflation here. It isn't nearly as bad as other countries. I think it's in the 7-8% range, if I'm not mistaken.
8.9 at this point.
Somewhere in that range. Is the inflation here, do we have inflation here for the same reason that inflation is everywhere in the world, or is there a unique variance to our inflationary issues here?
So, as you mentioned, the supply chains and imported commodity prices are the main drivers of inflation in Armenia as well. There are two indicators which I like to look at in terms of supply chains. One is the international container prices. So if you look at the international container prices since the second half of the last year, they are now 5 times higher, which means it is a symptom that the supply chains have not recovered yet after the COVID. So that's number one. And second one, there's a purchasing managers index, which tells us when the manager tries to purchase a raw material or some kind of an input, how much time does it take until the input comes to the factory? And that time is now on the record highs, which is yet another symptom that we have these supply problems around the world. So that's one, and in Armenia that has been the main driver of the inflation as well. Now, what is unique in Armenia, and that's very important to explain, as you said, that we have a lower inflation than our neighbors, is that we, as a central bank, for the last 5-6 years, have been very, very careful in anchoring inflation expectations in the country, and that's something which needs persistence. And after the 2015 shock, we have been very, very careful and made sure that the long-term inflation expectations in Armenia come down. In other words, whenever you see that the inflation comes up and it's a transitory inflation, the most important thing that it doesn't become a snowball effect, and after the inflation expectations go up, you have a persistently higher inflation expectations. Some of our neighbor countries have that problem. In our case, we have been very, very strong about that, and for 5 years we have been working on it. I think that's the main reason. Now, latest period, if you look at the demand in Armenia, we see that the consumption is growing with very healthy rates. So there are some demand components now, but they are not, as of now, they are not the most important components.
Well, I'm glad you closed with that, because this question leads from that. As you know, we're going to have possibly, depending on how it's shaped, substantial infrastructure investments into the economic system here, but via the EU. Now, the scale of it is determined on different factors, but for the scale of our economy, those are going to be substantial stimulants to the economy, infrastructure, which is all for the good. However, we already have labor shortages, and we have, if you have a healthy clip of foreign currency coming in, you might actually have the opposite problem, where you have a currency that is strengthening more than it should when you actually want it to be stable, so your exports are cheaper. Are you prepared, and what tools do you have to deal with the stimulus that's coming our way? We also have, at the same time, tourism is going to come back in a much stronger way over the next couple of years. We know that the level of flights, and then unless the COVID emergency continues, which nobody really knows, but likely, we're going to have a big foreign currency infusion just from tourism. What tools do you have to be able to combat this triggering inflation or an overvaluation of the dram?
I want to first come back to the point about the stability of the currency that you mentioned, because there is a nuance, but an important one, which is we don't target a stable currency. And that's very important. We target low and stable inflation, which is 4% in our case. So the behavior of a currency is a consequence of the macroeconomic stability, rather than the target of the policy. Now, as you said, the capital expenditures are very, very important. In the latest budget, which was adopted by the government last week, we see there a very big increase in the plan of the capital expenditures. It's around 60% annual increase in the planned capital expenditures. And this is we think this is a very correct step, because at the level of uncertainty that we face now, of course, public expenditures and public investment have to come in first, and then crowd in the private investment. So that's very good. We do not think that the risk of any kind of overvaluation are material here, because the important difference between the capital investment and consumption is that capital investment actually creates future potential. And then if you have a create future potential, then you don't usually see big imbalances in the economy. So as long as there is a high quality capital expenditures, when we'll see a potential of our GDP going up, and that usually does not trigger any kind of big imbalances, and hence no side effects are usually observed.
So you will not act to stop an appreciation of the dram to help to support local exporters. That's not part of your policy.
So we are, as a central bank, doing inflation targeting, and under the inflation targeting, exchange rate is flexible, and our target is basically inflation, 12-month inflation. So the price stability is the most important thing, and in our framework and as our mandate, we don't have anything related to helping any particular segment of the economy, being it exporters or importers or anybody else.
I'm going to throw you a little bit of a hard question. I don't know if you can answer it or not, but a lot of the sort of more risque central bankers around the world are looking at digital currencies, which has its advantages in tax avoidance, fighting tax avoidance and modernizing the economy. And this is already a very wired society in many ways, especially in cities. Is that something you guys are considering, or is that not on the table?
Of course, we are following the global developments. There are two big parts of the story. One is the central bank digital currencies, which is basically yet another form of central bank money, but with different technical specifications. And there are other so-called crypto space, which is different. We are following the global developments. At this point, I want to give you a sort of the central banker's point of view, what we think is good for society in that sense. And we think that the innovation which is going to help the society should come from the payment systems. So if we see that any of the developments fundamentally help to reduce costs or increase the quality of services in terms of the payment system, that's something which is very, very valuable. We don't have any specific framework as of now. And to tell you the truth, if you look at the world, it changes every year. China, you've probably known that they have come very hard now on particular in the crypto side. But again, for us, the guiding star is if it's innovation fundamentally, and it's actually helping our consumers to use better payment systems.
I'm going to leap back to something you said about remittances. I know. I'm starting to wonder, is there a large extent of these remittances that are actually people doing business abroad in these newer systems that exist? I know of people who, for example, go on sites, bid on work, get work. The person who hires them doesn't know who they are. They don't know who they're working for, and they get paid. Do you have the resources to be able to differentiate who is the person that's getting $100 from Moscow? Is this $100 remittance, or is this $600 that some person is getting here is for design work done in Germany that is not a remittance? Do you have a way to differentiate that? Because there's a lot of people who are making a living, in fact, making a good living in doing that kind of work.
It's a difficult question from statistical point of view, very hard to disentangle these two things. We try to make sure that we do the surveys, and we also look at the payments which come from the banking system. So we try to disentangle them as much as possible, but it's very hard at this point to give a very definite answers in terms of what is the income as a wage or salary which people receive from there versus remittances, which is basically a transfer of money from relatives or any other people. At this point, we see that the remittances or the transfers are the big part of the overall flows. We have, I think, around 9.8% in terms of the GDP, the share of the remittances. There is a tendency of the income in terms of wages going up, but it's very hard to observe. To do that, we actually try to do annual surveys, and so we can calibrate the respective shares of these two factors.
I'm going to close with a sort of a broader question, and this is, if you look at our financial system, I think we have a very good central bank. It's very conservative, but I think it's obviously done a good job of managing the currency, and that's the reality. It's one of the bright stars, frankly, in our governmental system. I think we also have a very good banking system. It's quite conservative, but the banking system here is quite solid. What we don't have is really in any way world-class financial services in the sense that would make this country or the dram itself more attractive for international investors. For example, if you were an international fund and you would have bought $10 million in drams 6 months ago, you would have gained 10% plus another 8% in interest, which is like an 18% return, which would beat any market almost anywhere. As a percentage of return would be exceptionally high by historic standards. What are you doing as a central bank to create an environment where you have international money that comes in here to buy the currency or buy our bonds to lower interest rates in the long run, to make this what is an island of financial stability in many ways, surrounded by a sea of instability, frankly, or very poorly run currencies like the lira, in which they have real unorthodox ideas. How do we take advantage of this situation? How do we weaponize the dram to develop the country further, especially the financial sector?
That's a very good question. First, what does the central bank do to achieve this development? The basic truth is the following. When I meet, or any of us meet with big international institutional investors, so these are people who manage trillions of dollars, many times more than the Armenian economy, first thing they look at is the macroeconomic stability. So for central bank, they look at the inflation, they look at the financial system, as you mentioned, but that's the very first thing. So the best thing that central bank can do to achieve the development is actually achieve the macroeconomic stability. And that reduces the risks and reduces the interest rates. So that has a very big positive externalities around it. So that's the first thing that we do. And you mentioned that we weathered the crisis quite well. Weathering the crisis quite well means preparing for a long time. So it's really the homework which is important. In case of the inflation, where I already mentioned that we have been preparing for shocks for the last 5-6 years. Same is true for the financial system, and so far that was very helpful. Second is the infrastructure. So market infrastructure is very, very important because it has to be convenient and you have to be on the world financial map. In that sense as well, one of the key things which we are doing is trying to set up a good market infrastructure so that international investors come to Armenia. By the way, you mentioned that the interest rates are very attractive. Lately, we have been seeing big capital inflows from big institutional players from abroad in our treasury market, quite sizable. So there is this inflow which we observe lately. Of course, financial system cannot go very far from the real economy. So you have to have a transparency in the real economy, transparency in the corporate sector, which will basically drive the inflows, and financial system will then grow in parallel with the real economy. Because the other extreme is that your financial system is growing at very, very healthy rates, but it's not followed by the real economy, and that's not sustainable in the long term. So we try to make sure that we have the development, but at the same time we avoid all kind of imbalances which are good in the short term, but in the long term can be very disastrous.
What you described is actually the United States economy, actually. A very successful financial sector. Well, you have problems in every other front. Mr. Nurbekyan, thank you very much for joining us.
Thanks very much for
inviting me. It was a pleasure. This is your host of CivilNet, Eric Hacopian. Thank you for joining us for this interview.